excellence, authenticity, patient, contemporary. This is the financial report of OCBC Al-Amin Bank Berhad from 2014 to 2023. In this report, we will delve into key financial aspects including profitability ratio, liquidity ratio, and risk analysis. This comprehensive analysis aims to provide insight into the bank's performance, strategic initiatives, and overall financial health over the past decade. OCBC Al-Amin Bank Berhad, a wholly owned subsidiary of OCBC Bank Malaysia Berhad, was established in 2008 as the Islamic banking arm of OCBC Group. The bank has been instrumental in promoting Sharia-compliant banking products and services in Malaysia, offering a wide range of financial solutions that cater to retail, business, and corporate customers. OCBC Al-Amin is known for its commitment to upholding Islamic banking principles while delivering innovative and customer-centric financial solutions. Before we start, let me introduce our group members from Group 7. Me myself, Anita Fia, Duratul Aina, Nur Alia Hanim, and last, Umi Kistina. Profitability ratio measures how efficiently a business generates profit from revenue, asset, equity, and capital employed.
ROA measures OCBC Al-Amin Berhad's efficiency in using its asset to generate profit. The higher the ratio, the better it is. From 2014 to 2017, ROA increased by 0.81%, reflecting improved asset efficiency and effective cost management. This increase was driven by OCBC Al-Amin's strategic investment in technology and batteries management practices. In 2018, ROA dropped to 2.20%, recovered in 2019, but declined again in 2020 and 2021 due to operational challenges and external economic factors. From 2021 to 2023, ROA increased by 1.18%, showing a sustained positive trend due to OCBC Al-Amin's strong market positioning and innovative financial solutions. ROE measures OCBC Al-Amin Berhad's ability to generate profit from the shareholders' equity. It means that the higher the ROE, the more efficient the company in achieving maximum profit. In 2015, ROE increased by 3.2% compared to 2014. However, from 2015 to 2018, ROE significantly dropped from 37.34% to 23.94%. This decline happened due to reduced net income and excessive debt growth. There was a slight increase in 2019 by 0.12%, followed by a decline in 2020, then it increased until 2023. The upward trend attributed to effective capital management or robust net income growth in OCBC Al-Amin Berhad. Return on deposit is used to evaluate the profit OCBC Al-Amin Berhad earns from the deposit it holds. The higher the ROD, the better for the bank, but with increased obligations. From 2014 to 2017, OCBC Al-Amin Berhad showed a rising trend in ROD, indicating increased profits from held deposits and improved investment management efficiency. In 2018, ROD dropped by 0.89%, then increased by 0.35% in 2019, followed by a significant decline over the next 2 years. It rebounded sharply to 3.53% and 4.45% in the subsequent years. The rise in ROD means OCBC Al-Amin Berhad was earning more profit from the deposit it held during that period. The fall illustrates the difficulties the business faces in making the best use of client assets. Profit margin indicates the percentage of net profit OCBC Al-Amin Berhad earns from its total revenue, reflecting the bank's operational efficiency. A net profit below 5% is low and risky, 10% is good, and 20% or above is excellent. From 2014 to 2015, the profit margin increased by 1.2%. This increase was driven by a 16% growth in net finance income. The profit margin rise in 2017, dropped the following year, rise again, and then fell to 46.13% in 2020. From 2020 to 2022, the profit margin increased from 46.13% to 63.11%, then decreased to 57.47%. The increase of profit margin is due to OCBC Al-Amin's initiative to invest in growth areas like renewable energy, advanced manufacturing, electronics, and logistics. However, the decrease factor is due to increased operating expense, increase in cases of COVID-19, and provision for credit losses.
Next is liquidity ratio are a measure of the ability of a company to pay off its short-term liabilities.
The current ratio helps to measure a capability of company to meet its short-term obligation that are due within a year. The diagram shows the current ratio for OCBC Al-Amin Berhad for over 10 years. From 2014 to 2017, OCBC Al-Amin Berhad steadily improved its ability to pay off short-term debts. In 2018, there are slight dip because of some credit losses, but the bank still stays strong. From 2018 to 2023, the bank's ability to cover short-term debts continued to grow, showing it could handle challenges like COVID-19 pandemic and maintain financial stability. Loan deposit ratio indicate how much bank lends out compared to how much it holds in deposit. From 2014 to 2015, OCBC Al-Amin Berhad lends more to the community, increased its loan deposit ratio. But from 2015 to 2017, as the economy improved, they lend less, balancing their deposit. Then from 2017 to 2021, they lend more again, especially during COVID-19 pandemic, causing the ratio to surge. This trend continued from 2021 to 2023, showing ongoing economic uncertainty and more borrowing. Cash deposit ratio shows how much of bank short-term liability can be covered by cash and cash equivalent. Over the past decade, OCBC Al-Amin Berhad cash deposit ratio has been a light roller coaster, show how they handle their money. It went up in 2016 maybe because they had to follow rules, then it went down in 2017 and 2018, maybe because they were busy investing. During 2019 until 2021, it kept going down because of the pandemic COVID-19, but shoot up in 2021, maybe because of the help from the governments. After that, it stayed steady in 2022 until 2023, showing they found a good balance between needing cash and finding way to investing while the economy was getting better. Cash ratio is a measure showing how much cash a company has compared to short-term liability. Over the past decade, OCBC Al-Amin Berhad cash ratio changed a lot, showing how well they could cover short-term debt with cash. It was highest in 2016 at 15.62% and the lowest in 2020 at 2.29%, mainly because of COVID-19. In 2021, it went back up to 15.90%, showing they did better financially. It stayed steady in 2020 and 2023, meaning they managed their cash well even though it fluctuated a little.
The last is risk analysis. Risk analysis identifies, assesses, and manages potential risks to a project or organization. It involves spotting problems, evaluating their impact, prioritizing them, and developing strategies to minimize risk. Continuous monitoring ensures effective risk management and informed decision making.
First, the debt-equity ratio dropped from 16.33 in 2014 to 7.81 in 2023, indicating reduced debt reliance. This metric shows the proportion of debt to equity, with a lower ratio suggesting a more conservative capital structure. Next, the debt to total asset ratio decreased from 94.23% in 2014 to 88.64% in 2023. This decline reflects a reduction in debt relative to total assets, indicating improved debt management. Furthermore, the equity multiplier ratio fell from 82.84% in 2014 to 35.34% in 2023. This significant drop shows a shift towards a more conservative capital structure with less reliance on debt. Lastly, the loan-to-deposit ratio increased from 73.13% in 2014 to 86.94% in 2023. This rise indicates more aggressive lending relative to deposits, reflecting higher lending activity.
In summary, over the past decade, OCBC Al-Amin Bank Berhad's financial performance has varied due to market and regulatory changes. The bank improved profitability through strategic initiatives, especially during economic recoveries. Liquidity ratio shows its ability to manage short-term obligations and adapt to challenges like the COVID-19 pandemic. The bank balanced profitability with efficient liquidity management and compliance. To strengthen its position, it should evaluate risk, diversify funding, improve credit practice, conduct stress tests, and ensure compliance.